Good morning, everybody, and welcome to the Siler Wealth Management video blog. Today is Thursday, February 16th. I hope everybody had a long weekend. If you worked yesterday, sorry about that. If you didn't work yesterday, hope you enjoyed yourselves. Listen, still, turbulence are in the markets, but one thing I want to look at, and I talked to you over the last couple weeks, need that second whoosh downward, need something to kind of wash out some of those sellers. We did see that on Thursday. On Thursday, we undercut the January 20th lows on the S&P 500. So that was a big deal. We wanted to see that kind of panic. And then the follow-up was Friday's huge run in the markets. Okay. Also, we saw gold going down on Friday, which has been that fear trade. And now Goldman Sachs, by the way, not sure they're right on this, but they're saying that they would go out and short gold right now. I don't know if you short anything right now, because a short position is one of the most risky positions you can take. And let me explain to you what that means. I know a lot of people out there saying, oh, short this, short that. Well, when you buy a stock, let's say you buy something for $20 a share. Your downside is $20. You can lose $20 a share or everything, okay? When you short a stock, you do it on margin, meaning you have to borrow money to do that short. And you are selling a stock that you do not own. That's why you have to borrow it. So in other words, you don't like a stock. You're taking a bearish posture. You want it to go down. It's $20. I think it's going down. I'm going to sell it at 20 in hopes to balance out that position and buy it back at 10 or 12 or wherever the case may be, whatever your target is. But here's the problem. You're borrowing money on margin. That's the way it's done. They're done in margin accounts. If the stock goes to 30 or 40 or 50, you can lose more than your investment. That can actually happen, theoretically. Does it always happen? No. Has it happened? Absolutely. Can it happen? Sure, to someone inexperienced. So you got to be really careful on your shorts, all right? There are other ways to play bearish postures, and they're really sophisticated strategies, and it's by using options and things like that, where you limit how much money you can actually lose. But, again, they're very, very sophisticated. They can be speculative, and they're certainly not suitable for everybody. Okay, so last week the markets were down across the board. The Dow Jones down over 1%, Nasdaq down about 0.6%, S&P down 0.8%. Oil had a big rally. It was getting hammered early in the week. Had a big rally last week, late in the week on Friday, because four big oil producers, Qatar, Russia, Venezuela, and the Saudis all said that they will keep oil production at January level. So they're not increasing their output right now. So that helped oil rally double digits percentage-wise. So that helps the markets. Now, what are we going to look forward to going the next month or so? Well, we're kind of winding out of earnings season. All right, earnings season is pretty much almost done. Now you want to check what the Fed's going to do. The Fed, Janet Yellen, chairman of the Fed, didn't give us any indications that she is not going to raise rates in March. The market believes, I think, with this recent rally, believes that she is not going to raise rates in March. However, that being said, who would have thought that the Fed raises rates in December, and now we're at interest rates at year lows? Okay, lowest mortgage rates in the last year are right now. So you may have that other shot to refi, but you got to do it quickly. All right. So a couple other things going on. Apple Pay, they launched in China. That's good for them. A lot of people are using Apple Pay these days, and that's a huge deal for them. So we'll see what's going on. But I got to tell you, some of the stocks that I'm looking at, they're starting to hold up. All right, even despite a really bad week, stocks like Apple, Disney held up. Disney earnings, Disney had phenomenal earnings. That's what I'm looking for. Again, I want to make sure I reiterate this. I'm looking for companies that had great quarters, but the market just way overreacted to the downside. Markets overreact. Okay, I'm sure last week part of that was that Bernie Sanders won the caucus. That's part of it. I'm sorry, the primary. So that's a concern to all of Wall Street. Wall Street can live with Hillary Clinton. Wall Street can live with Jeb Bush. Wall Street can live with Marco Rubio. I'm not sure about a Trump-Sanders election. I think that would be very unnerving to Wall Street, because both of them are smoking guns. You don't know what's going to happen there. You have no idea. So we'll see what happens election-wise. But again, I think as long as whether it's Hillary or whether it's and I think Ted Cruz probably the next front runner, but John Kasich, any of those guys, I think Wall Street will be okay. And bottom line is, markets do very well with Democrats in office, but it's always usually with a setup from what Republicans have done in office. So you look at the numbers, but to me, that doesn't matter as long as it's not Bernie Sanders. All right, this is not a not Bernie Sanders thing. It's just he's not about building wealth. He's not a capitalist. He's a socialist. So that being said, your portfolios right now, need to look at them. Let's do some reallocations. We're looking at some other areas of strength in the market. Just because they were leaders last year doesn't make them leaders this year, although I do believe that some of the stocks in that FANG group will be leaders. But I remember I talked about FANG last week. Facebook, at Amazon, Netflix, and Google. I had concerns about Netflix. It rallied last week. But in that A spot, I wouldn't even mind making it FONG without the O and add Apple. And I think that Apple at these levels are really, really strong. And it does not seem to be wanting to go down. Okay, so I think that's a pretty interesting opportunity. I don't know your personal situation. My clients own it. I have to disclose that. We own some Facebook. We own a lot of the FANG stocks. We own Google. We own all of those. I think I don't own Amazon, but I don't own right now. But those could be, I think, those, Facebook especially, because they had a fantastic quarter. Google had a fantastic quarter. We want to look at companies that are growing their revenues, growing their earnings. That is huge. It's huge. Okay. Please share my video and like our video. What I'm going to do is on Thursday, I'll draw 2 cruises to the Bahamas, and that is two people for 2 nights to the Bahamas, and it goes out of Port of Palm Beach. So share my video. I'll give you 2 entries. You like our video or the Facebook site, I'll give you 1 entry. All right. In the meantime, our newsletter is coming out today. I hope you enjoy it. A lot going on. We're going to watch the markets closely. We're indicating a big rally today. We're looking at about 180-point rally right on the open. Let's hope it holds. Okay. What we don't want to see is big rallies followed by big sell-offs at the end of the day. Remember, it's not where you open, it's where you close. Give us a call if we can help you. And by the way, 401k allocations. That's also important. You can't just forget about your 401ks. If you have 401ks at your employer, you can contact us as well. We are providing that service and helping you allocate 401k assets. All right. You guys have a great day, and I'll talk to you on Thursday.